what's up, y'all? It's your girl, Patrina Dixon, the It's My Money Lady. Today's episode, we're going to talk about 4 tips to prepare for home ownership. But before we get started, for those of you that are always rocking with me, I appreciate you. Those of you that are new, my name is Patrina Dixon. I'm a personal finance coach. I'm a 2-time #1 best-selling author, and I have a platform for grants for small business owners. So to get all that tea, drop down below and click the link that works best for you. And if you're not subscribed, go down and hit that red subscribe button. If you're watching us, if you're listening, make sure you're following it, the Money Exchange with Patrina Dixon. Today I have Miss Crystal Kelly. Again, she's going to talk about 4 tips for preparing for home ownership. Hi, Crystal. How you doing?
I am great. Thanks for having me.
Yeah, I'm so excited to have you here today. Before we get started, tell them who you are and where you're located.
My name is Crystal Kelly. I am a real estate agent with Berkshire Hathaway on the Robert Allen team, and I am located in Atlanta, Georgia. I am also the owner of IMCK LLC, where I hold platforms for women empowerment events such as I Am Beautiful Survivors Award Gala, which honors and award women survivors of abuse.
All right, thank you so much. So let's get right into it. So a lot of people, we're about to hit the season. I'm told that this is the season where a lot of people search for their homes. Sometimes it's the first home, sometimes it's another home, sometimes it's a real estate investment home. So let's talk about 4 tips for preparing to buy a home. Let's start with tip number 1.
All right, so tip number one, of course, is determining your budget. And determining your budget means how much do you have saved to buy a home? How much do you have to spend on buying a home? How much do you want to invest in the next 30 years in buying a home? When you set your budget, that will outline the guidelines for the size of the house, the area and location of the house, and what the appreciation of the house, meaning if you're going to go into it with equity or you're going to go into it, owing money until you build equity. So it's very important from the jump from step number one to determine your budget.
I love it. So y'all already know I'm the money lady. So hearing the word budget, I love that, right? So know how much you can afford. That's the bottom line. And if you are managing your money accordingly, then and getting ready to make a purchase, and when you buy a home, that's one of the largest purchases that you will buy. So you want to, or that you will, buy. That's a huge purchase most times in folks' lives. So you want to make sure that you're preparing for that accordingly. So that's why Crystal is here to tell you how to do that. So that's number one. That's the component, budgeting and looking at it from the various different lenses that she just mentioned. So what's tip number 2?
Tip number two is to see how much you pre-qualify for. So you set your budget, right? And when I say by setting a budget, you're going to look at how much you have prepared to spend out of pocket, and then you're going to determine by getting a pre-qualification how much you are pre-qualified for. So they're going to check your credit. They're going to check your how much income you have between either yourself or if you're married, between you and your spouse, your income in your household, if you have any additional income in addition to your salary from your job. They're going to look at your work history. Now, I do want to mention one quick thing. I get a lot of questions about um, 1099 employees because we have a lot of business owners out there that have owned their own business. They're 1099s for years. Now, if you have 2 years of 1099 taxes that you have filed showing steady income for the past 2 years or more, you are in good standing to purchase a home, in addition to other things, but that's a good start. So the bank will look at that and they will tell you how much you qualify for. Now, if you qualify for a home, let's say that you qualify for a home that's $500,000, but your budget, when you really sit down and you did your budget first because you looked at all of your expenses versus your incoming income, and although you qualify for a $500,000 home, that doesn't really mean that you can afford a $500,000
Oh, I
um,
love that. Wait,
a home.
y'all may say, no, she didn't, but yes, she did. So don't take that pre-qual letter as let me buy a house up to this dollar amount, because you may not be able to afford it on a regular basis because life be lifing. So you want to make sure that you are not, that is just saying that based on your financials that you submitted, like this is a dollar amount, but it doesn't take into, I don't believe, and maybe Crystal you can attest to this, it doesn't take into all the other things that happen within your life on a regular basis. So it's really important that you don't use that as the bar. That is just giving you a sense of a house that you can buy, but you want to stay below that. Do you have any tips on how you do that? So let's just say you got a pre-qual for 500,000. What really type of house or the amount of the house that you should actually look
Yes,
at?
so that's why, and you may look and talk to other people that actually reverse those steps. They want to get the pre-qualification first and then set your budget. The reason why I like to go with looking at your budget and looking at your finances first is because that's your point of reality,
Yes.
right? So we all get that sense of euphoria, let's say when you go into a department store and you just see all of this stuff that you just, oh my god, I really love those shoes, or I really like that piece of furniture over there, and you start envisioning, oh, I really need this, or I deserve this, I can get this, and you lose that sense of reality, like start to forget, well, I can only afford this. I
Mm-hmm.
may be able to buy this new dress, but I'm going to have to move some things around, or I'm going to have to, make a afterpay schedule. If you find yourself having to do that because you get high off of that, like that euphoria feeling, like, "Oh my gosh, I'm in this store and I want this, I want this." When you get that pre-qualification letter, that number is a high,
Mm-hmm.
and it may be like, oh my gosh, all these doors are opening, for me, I have access to all this great stuff, all these great homes. But then when you go back to your, this is what I bring in,
Mm-hmm.
this is what I pay out, and this is what I have left over. So you have to determine the life that you want to live. Do you want to live comfortably in that home that you can afford, or do you want to be able to purchase it because you qualify for it, but you're living paycheck to paycheck, or you're moving some things around in order to buy what you qualify for? I want to
Exactly.
be able to live in a home where I don't have to afterpay, or I don't have to move things around. I want to be in there comfortably and be able to have extra income to decorate it or put things in it that I enjoy. So
And
that's my
I love
tip.
that. I love that you're suggesting that order. That's why this episode is really important because, depending on who you work with, sometimes they're doing things that is more advantageous for them as opposed to you, the person that will live in this structure for whatever period of time that you will. So thank you so much, Crystal, for adding that. So you've mentioned budget and getting your money right, knowing your numbers, because y'all, when the math ain't mathing, y'all know that may not be a word, but I say that when the math ain't mathing, it ain't mathing. So Crystal wants to make sure you're getting these steps in the order that she's suggesting because this will help you in the long run. So we have budgeting, we have pre-qualification, and then what's your third step?
Then you're going to determine your down payment. And let me tell you why I say you're going to determine your down payment. Because you've already looked at your budget, you looked at what's coming in, what's going out, you seen how much you qualify for. Now, this is almost kind of like negotiating your salary when you're going on for a new job, right? You're going to say how much you're willing or not willing to pay out for that home. I may be very well capable of, because a lot of people will tell you you need to save 20% of that home for a down payment, or you need to be able to pay X amount of dollars. I may have $10,000 saved to buy my home, and I'm not budging.
Mm-hmm.
That is my down payment. That's what I'm comfortable with. That's what I can afford. That's what I saved. And the reason why I say that is it leads into my fourth step. But the reason why I say that is because there are more than enough
Mm-hmm.
programs out there that will allow you to get the home you want, the home you deserve, the home you can afford, in the price and the down payment that des- that you set.
And is that when you say programs? Is that because I know you're situated, if you will, in Atlanta? But does that the programs that you're talking about and references, is that everywhere, or you're or in Atlanta specifically?
No, that's national.
Okay, that so she's letting you know, like no matter where you are, there are programs that can help you with that component of your purchase. So when you say negotiate, because you use, I like that you said this, the analogy of negotiating like you do for like a increase at your job or the salary for a job that you're getting. What sort of things that should they say? I know that we're still in tip three. What things should they like? How do they approach that conversation with the lender or the real estate agent or whomever they need to do it with?
Okay, so when I say negotiate, like we want to be realistic, right? So same thing with a job interview, you know what you know what your qualifications are. You know the qualifications that they're looking for and the salary range. You know what you don't want to come below, but you're also just going to shoot out there. Let me see if they'll bite on this number, you know. So same thing with their house. Now, when I say set your own budget, of course, if the home, going back to that $500,000 home, you know what's coming in, you know what's going out, you know what you pre qualify for. In that pre qualification, they're going to let you know an estimated monthly uh, mortgage amount or whatever. So, of course, you're not going to you're going to be realistic about the budget. You're not going to say, oh, I just want to pay $1,000. You could, but then you have to readjust. Okay, that's going to change my monthly payment. So those two go together. But what I'm saying is your maximum, because there are more than enough programs out there that can offer you low to no down payment, can offer you um, if you're a part of different organizations and not just vets, because I know a lot of people, I thank you for your services. A lot of people concentrate on just vet loans or VA loans or whatever. But if you're a part of different, certain type of different organizations, like if you're a teacher, did you know that there's special down payment assistant programs and even assistant house buying programs for teachers?
Mm.
I helped a teacher get into a home that where she had zero down payment just because she was a teacher. So things
Wow.
like that, which leads me, I'm sorry, I'm going to segue
Okay.
to point number 4, which leads me to finding the right agent. So a lot of times people, say they try to educate the agent. And I always laugh at this because I'm just like, where did you get licensed? Zillow.com or, Google.com? We agents know more about the industry and the market change, and they have so much more access to these programs than you do on your own. Can you do it on your own? Absolutely. Should you do it on your own? It is not highly recommended.
Mm.
I always use the example like, I love to bake. Can I bake? Yes. Am I a baker? No.
Mm.
Just because I can bake doesn't mean that I should open up my own bakery and start selling to people. That's not my forte. I'm going to leave those to the experts that went and, it's a part of their everyday. Every day as agents, we're talking to the people that are selling these homes, the companies that are selling these homes, we are required to keep up on changing the laws that are changing, the industry rates that are changing. We have close personal relationships with finance managers, not with just going straight to the bank. So, with the right agent that can help you set your budget, look, suggest different locations, really look at your needs, your wants. Um, there was another client that I had, and he started off with he came in out the car saying, "Hey, I won't qualify. My credit score is really low. I don't even think it's 600." And he owned a home already and was like, I'm falling back on. And I'm like, we can help you because we have access to so many um programs and resources that you may not have on your own. Just like with It's My Money, she may have so many more access to, like she said, business grants that by you doing a Google search, you may not have that same access to those grants. You may not have those same, you know, um, insights that she can have, that she can steer you to say, hey, you know, instead of filling out the application this way, you want to fill it out this way, or you these are some tips on how to get you to the next stage. That's what an agent can the right agent can do for you. Give you tips on how to successfully buy that home where you're not um sending out the check and then you're moving into the home and the first feeling you get is buyer's remorse. That
Ooh.
is my goal as an agent. I always work with my clients to make sure that they're not just buying a house, but I'm setting them up to move into their home.
Yes, and now when you say, because you emphasize the word right agent, what are some things that people should look for that are red flags in agents?
Red flags, I think um some of the red flags, and shout out to all the agents that's out there, but it's just kind of like dealing with any salesperson, maybe buying a car, salesperson, or anything. Anyone that does not take into consideration um your wants, really sitting down and talking to you, talking to the financial decision makers. Sometimes we get these couples and you think, oh, okay, this is the person that reached out to me, so they're the decision maker.
Yes.
Sometimes it's the person in the back that's saying, okay, you may be the person with the finances, but I'm the one that's got to make the decision.
Mhm.
I always say, let's talk to them both. So if you're having an agent out there that's not talking to all the decision makers in the house, sometimes it even involves the kids, So it's important. It's important. A red flag is one that you can't. I say one that you can't get in contact with. Um, Always leaving a message or sending you to an automated system. Just personable. Look for an agent that really knows the area, the different areas, and when they're speaking to you as agents, we're not allowed to be like, oh, this location right here get you shot up. But we are, you know we can say, hey, you may want to check out the uh, police reports in this area, or check out what the school district is like. You can lead them to certain sites, but I would also look at if they're having those conversations with you, not just saying, yes, I found this house in this location and I think it's a great fit for you. I always have the conversation. I take into consideration before I suggest that. Do they have young kids? Are
Mhm.
they are they in school, are they out of school, are they older, and they don't have any kids around? Do they want to be surrounded by schools because that's school buses coming in and out, that's kids running around? Are they highly allergic to pets? Maybe they don't want an area with a lot of pets going back and forth. So I look at those things, and the right agent will not even suggest places that put you in those situations.
Got it.
So that's what I mean by the right agent. And red flags, just like with any relationship, any deal that you're about to make, communication, communication, communication is key.
Yes.
Upfront, honest, direct communication.
I love that. Now, I know you said 4 tips, but I have to ask you about this because some people, especially first-time home buyers, you said they get that whole high about the how much they can afford and all that. So remember, y'all, it always budgeting is always key. And below, you'll have access to It's My Money Academy. You can get a 7-day free trial for it. But and then more information to help you get your money right is in there. But my question, I mean, not yeah, the question is, talk to them, or I guess my statement slash question, let me put in a question, can you share, okay, you've budgeted, you've been pre-qual, you did the real like pre-qual, you got your down payment right, you're working with the right agent. How long is the process? Like, is it going to take me 6 months? Let's say, when I say how long, I meant after the house is found. How long is the process after that? Because we know that you got to go out and got to find that right house. But once that right house has been, what I'll call it, secured or identified, how long does it take after that before they then can walk in, hold the keys, and say that's my home?
So it all depends on you as the buyer, your readiness. So if you've done all of these steps and in your pre-qual, let me back up to two. When you're working with the right agent and they're finding the right program and everything for you, they have relationships with financial managers. So they are going to, check your credit and get you ready to purchase the home that fits into your budget, that fits into that pre-qualification comfort level. And at that point, that drives the timeline. So if if you came into it, like I used that example by the one guy that we helped, his credit was low, but what we did was outline what he needed to do to get to a certain level. We actually sold his home while he was in it,
Oh, he
put a
was in
hundred,
the home already.
yes, put a
Okay.
100,000, because we had a program that allowed him to do that. He
Oh,
never
okay.
knew about it.
Okay.
um Put $100,000 because he had $100,000 plus in equity. Put $100,000 in his pocket, um while he was still in the home. He then took that money, paid off what he needed to pay, had money left to put down on a down payment on his new home, and
Okay.
then we sold the home to another person that ended up buying that home. So that timeline is very different for that person versus a person that's, you know, they got their down payment ready, their credit scores on par. We've secured financing. Now, once we've done all of that, one of the things that we kind of pride ourselves on, like, we can get you closed in less than 30 days,
Okay.
and we have the track record to prove it.
And when you
So
say close, what does that mean? Because some people may not mean. What does close mean?
so so closed. Oh, so you put in an offer first on a home. That seller decides whether they want to accept or decline the offer. If they accept your offer, then the bank and everybody goes through with checking off all the boxes, checking your finances, rechecking, your credit, making sure that those funds are truly secured. After that, you move into close. That means that we are ready to sign the documents. We're going to have all your inspections completed, because dependent on the loan that you have, like if you have an FHA loan or a conventional loan, conventional means that you're not going through any type of government funding. Conventional loan is where you're able to get a conventional loan through a bank and their financing.
And that
Um,
requires
the,
though a certain dollar amount against the house
the
amount, right?
the conventional loan is almost like it's almost so your best
Mm-hmm.
is cash, of
Mm-hmm.
course, right? Cash is king.
Uh-huh.
Um, your second best, very close, is conventional because there's not a lot of red tape that you have to go through to go ahead and close and sign the papers to say this sale is done. The conventional loan, the bank has already, agreed to put up this amount and you're good for it. You will repay it within the next 30 years or however. And you want to always make sure that you get a fixed income interest rate.
Interesting.
Just
But with
FYI.
conventional, don't you have to have a larger down payment? I guess is that what I'm saying?
Not necessarily. So
Okay.
with conventional loan, you have more access to the driver's seat. When I said you can control your down payment, conventional loans, you have more control over your down payment. FHA loans are more governed by the government.
Mm-hmm.
So when you're going through inspections and appraisals for FHA loans, the house the seller could be asking this amount for the house, let's say 500,000, but it may appraise for only 400,000. So FHA won't loan you more than what the house is appraising for. So you have more red tape. So you can either, some sellers will say, I want you to pay the gap
Mm-hmm.
between the 400 and the 500. That's where all of this negotiation comes in between the offer being accepted and you closing, because all of this is going back and forth. With the conventional loan, you don't need all of that appraisal approval or
Hmm.
inspection approval.
Okay, that's interesting.
So,
I always
yeah,
thought that one of the so those are differences, but one of the differences between conventional and FHA is the percentage of down payment was like
some FHA programs require a certain percentage of the down payment because they can get low to no down payment as well. That's why I said working with the right agent, because you can get an FHA loan. Um, I'll use me, personal example, right? So I purchased a home in Charlotte, North Carolina. It was an FHA loan. The down payment um, that was, let's say, requested or that's needed was more than what I had. We worked with another um, lender. My down payment ended up being $1
Mm,
because we found where um, the company I worked for at the time qualified me to get a lower down payment. They had like a special program or something, but my down payment was $1. That's why I was like, get the right agent that has access to these programs and that's willing to do the work with you. That's not going to just send you out on the first, oh, nope, that's what you have to do. Nevertheless, but there's more red tape with FHA because you got to remember FHA is government loans.
mm,
They do qualify more people in more situations, like low credit, first time home buyers. You can get different interest rates with FHA. Great program, but the government controls a lot of that decision making rather than conventional loans. Conventional loans is your money
mm. It's
because
what? It's what?
it's your money.
What I thought. Oh no, she didn't. Well, this has
Right.
been very helpful. We got so you really gave five. Well, you gave four tips and some intel. So she gave first tip budget. Know what you're working with. Know your money. It's your money, so you want to make sure you got a sense of that before you get into what the pre-qual says. So your lender will then give you the pre-qual. Like this is saying, based on everything we reviewed that you submitted, this is about how much house you can get. Then down payment. How much do you want to put down for that house? Determine that. And then get yourself the right agent. Somebody that's representing you out in this field that knows. And listen, Can you put change a tire? Probably, but can somebody change it quicker or faster? You probably. Can you try to DIY, look at YouTube and fix your car? Probably, but should you bring it to a mechanic? Likely. So the thing is, could you try to do all of this? Maybe, but when somebody doing this every day, all day, or very frequently, more frequently than you want to get yourself that individual that has the training, the certification, that gets more information funneled through them relative to what's going on programs in your specific area, depending on your occupation. As you heard, you can end up being in a house for less than you expected. So you have to do 1, 2, 3 first, and then get yourself with the right person who's going to represent you. But one of the largest purchases you'll likely make in your adult or your life, probably. I wasn't going to say adulthood, but some people buy houses earlier than others, right? So that's the 4 tips that she gave. But then she broke down what FHA loans are, what conventional loans are, and the fact that even within those, it varies. So again, it's starting with get your foundational money right before you start going down this process. And not everybody should be or could be a homeowner. And guess what, y'all? That's all right. It's okay. But if you're interested in doing it, Miss Crystal has given you 4 tips and some additional information to help you along your journey. Now, Crystal, they may be wanting to work with you as their agent. So tell them a little bit more about where they can find you, and that information is going to be down in the show notes. Wait, Crystal, before you answer, hit that subscribe button if you're not already subscribed, because I want to make sure you get all the great episodes that I bring forth that give you information to help you along your journey. So, Miss Crystal, where can they find you?
Yeah, so I'm more readily found on Instagram at I am Crystal Kelly, and that is Crystal with a C and Kelly 1E. Um, but you can hit me up there. I'm open to any questions that you may have, even, what's the right home for me? I get a lot of those questions. Sometimes it may just be a condo, sometimes it may be an investment property. What's the difference and everything like that. So I'm very open to questions. So you can hit me up on Instagram on I am Crystal Kelly.
All right, and that again will be down in the show notes. So again, Crystal, I appreciate you. This is very helpful. I know a lot of people within the It's My Money community are aspiring to be homeowners, and some are actually even purchasing their next home. And this information that has been shared is helpful for you as well. So thanks again for being on the show. And you all, thank you for keeping it locked here on The Money Exchange, or It's My Money with Patrina Dixon. And if you need help with that budget, drop down and go to It's My Money Academy, y'all. Y'all already know I'm doing a lot. My team and I are doing a lot to bring forth information that's at your fingertips, because you're not always going to get this juicy information you get right now. So I make sure that information is available. There's content, there's modules, there's videos, and guess who's doing the videos? Your girl. So you want to make sure you go and check that out, and you get 7 days for free. So that information is going to be on there. And guess what it's called? It's My Money Academy. So you want to check that out. So, all right. Thank you for here. Hit the subscribe. If you're listening and not watching it, thank you as well. Make sure you go ahead and follow on the platform that you're listening. Again, have a great day.